How small apartment investors can maximize deductions and credits. Review a list of deductible expenses. Mortgage interest and property taxes. Calculate interest and taxes paid on the property's loan and local assessments. Operating expenses. Deduct costs associated with property management, repairs, maintenance, and utilities. Check if additional costs, such as snow removal and landscaping, are incurred seasonally and should be tracked separately. Insurance include premiums for property insurance, liability insurance, and any additional coverage, like flood insurance, required for the location. Identify available tax credits. Energy efficiency credits. Explore credits available for installing energy-efficient upgrades, such as solar panels, efficient HVAC systems, or double-pane windows. Federal or state programs may offer credits for these improvements. Low-income housing credits. If applicable, research the low-income housing tax credit for properties providing affordable housing. This credit may be available for investors who rehabilitate or develop low-income housing units. Track and categorize expenses accurately. Use accounting software or spreadsheets. Use tools that allow for easy expense tracking and categorization. Categorize expenses like repairs, management fees, and utilities consistently for accurate tax reporting. Keep detailed documentation, save receipts, contracts, and invoices for all deductible expenses to substantiate claims during tax reporting or audits. Separate capital improvements from repairs. Note that capital improvements, such as roof replacement or major remodels, are typically capitalized and depreciated rather than deducted as expenses. Differentiating these from repairs maximizes deductions in the correct tax year. Stay informed about changes in tax laws and credits. Monitor legislative changes as tax laws change frequently, potentially introducing new deductions or adjusting eligibility for existing credits. Keep informed on relevant changes that may impact real estate investors. Review the IRS and state tax websites for updates on available credits, incentives, and deductions applicable to real estate investments. Work with a tax advisor who specializes in real estate to ensure you're maximizing deductions and taking advantage of all available tax benefits. Schedule regular expense and tax reviews. Conduct monthly or quarterly expense reviews to ensure all deductible items are accounted for and properly categorized. This ensures no tax-saving opportunities are overlooked. Engage in year-end tax planning to review deductible expenses and identify tax credits for the coming year. This proactive approach allows for adjustments that optimize tax savings. Additional tips for maximizing deductions and credits. Deduct professional fees, as fees for legal, tax, and property management services related to the property are typically deductible. Include these in your tax planning. Monitor changes to energy efficiency incentives, as energy efficiency incentives vary over time, so stay informed on any new credits or changes that could enhance tax savings for green investments. Deduct tenant-related costs, such as expenses for tenant advertising, leasing fees, and tenant screening services, which are deductible and contribute to lowering taxable income. Maximizing deductions and tax credits is essential for apartment investors looking to enhance after-tax returns and increase cash flow. By taking advantage of deductible expenses, such as mortgage interest, property taxes, and operating expenses, along with credits for energy-efficient improvements, small apartment investors can reduce tax liability significantly. Implementing proper record-keeping, staying updated on tax law changes, and consulting with tax professionals enables investors to fully utilize available deductions and credits, optimizing their financial outcomes in apartment investing.